it's your boy King Abe. I'm back with another banger, back with another amazing video for you guys. So in this video guys, I'm going to be showing you the 20 and 200 EMA, the 20 and 200 moving average strategy. That's what we're going to be looking at today. So guys, grab your pen and paper and make sure you guys subscribe to my channel. And if you find this value in this video, make sure you guys give me a thumbs up and also share this video as well, because as we all know, sharing is caring. So let's dive right into the video. So guys, in this video we're gonna be looking at Euro JPY. That's what we're gonna be looking at. We're actually on the 4-hour time frame. I'm going to be showing you the 20 and 200 moving average strategy. This strategy is very powerful, and I'm going to make sure I explain everything step by step so you guys will be able to understand it and start using this strategy as soon as today or whenever you want to. So, like I said earlier, we're looking at your JPY. We're on the 4-hour time frame, and what we're gonna do now is obviously we're gonna add the 200 moving average first, and you click on moving average exponential, and then obviously we got to change the settings. You're only gonna focus on the input, on the length. That's what you're gonna focus on. And then once you're done, if you want to change the color, you change the color. For me, I'm gonna use black because I'm using a white background. And then I'll just switch the thickness to the second one, and then you click OK. Now I'm going to go ahead and explain how the 200 moving average actually works, but this is exponential moving average. Make sure you add in exponential moving average, not simple moving average. So when you see it, whenever you have the 200 moving average on your chart, basically what that means is you're looking for long-term trading. And also the 200 EMA people also add it to their chart as support and resistance. You can also use the 200 EMA as support and resistance. As we can see here, right here in this zone right here, we can clearly see the price tried to go up but rejected the 200 EMA. That's how you know. So what happened right here, we can call it a resistance. This was a resistance right here. And let's see if we can find another example. Let's see if we can find another example. There we go. Yes, another one right here. The same thing. We actually rejected it twice here, making this a resistance zone. So it's very simple. That's the two reasons why people use the 200 moving average on their chart. And when price is above the 200 moving average, you're looking to buy long. When price is above the 200 moving average, you're looking to buy long. It's that simple. And when price is below the 200 moving average, you sell shorts, as we can see right here, and we can also see over here. So when price is below the 200 EMA, you sell short, and when price is above the 200 EMA, you buy long. Is that simple? Now we're going to go ahead and add the 200 EMA. The 20 EMA. And we got to change the settings, change the input, the length, change it to 20. And the style, I'll just use a different color. You can use whatever color you guys want. It doesn't have to be the same as mine. And once you're done, you click on OK. Now, this is how you use the 20 moving average and the 200 moving average together. So when we take a look at this bar here, we can clearly see that price broke the 200 EMA and also broke the 20 EMA. Now, what you wait on is for this cross to happen. This cross right here in this zone. Let me draw it out for you guys. Right here. When that cross happened, that's your confirmation right there. So you have two confirmations because you actually need three confirmations. So the price is above the 200 moving average. That's your first confirmation. Your second confirmation is that price, the 20 EMA cross the 200 EMA going upwards. That's your second confirmation right there. The cross happened. That's your second confirmation. Now your third confirmation is actually using support and resistance with this strategy. If you don't know how to use support and resistance, how to find your zones, how to actually draw your support and resistance zone, you guys can click on the link right now. The link right here, you guys can click on it. Now we add a resistance right here. What do? You pull out your horizontal line, or if you want to use the rectangle tool, it doesn't matter. And as we can see right here, we had a resistance here, and we had a support zone in this area. So as you guys can see right here, now that you have your support and resistance zone right here, when price closed above this resistance zone, that's your third confirmation. That's your third confirmation. And what do? You have your TP1 here. You have your TP1 here, and as you guys can see, it got to your TP1, and what the price do? Pull back a little bit, and then it continued upwards. It continued upwards, uptrend. And if you are someone who used to take profits, you just do the same thing. We clearly have a resistance zone here. So your TP1 will be here, and your TP2 will be right here. And price just kept on going. And the reason why you need to understand support and resistance and use it with this strategy is because, as you can see, we had consolidation right here. We had a consolidation at this zone right here. We have a consolidation. Now, because you have your support and you're using this strategy with support and resistance, you can clearly see that you cannot get in this trade at all. You have to wait until price breaks either the resistance or price breaks the support. And if price break the support, if you know how to really trade, you can actually sell here when price breaks this support zone, and then your TP is going to be right here at this next zone, because when price gets here, it's going to touch the 200 EMA and then probably pull back a little bit, and it might just continue. You never know. But just to be on the safe side, after a consolidation, trend could either go up or it could come down. So that's why I said, even if price decides to go the other way when market opens, because I'm doing this trade on a Friday night, the market is already closed. So when the market opens and price decide not to continue going up because it broke the resistance right here, because it broke the resistance right here. So because it broke it, so these two red bars, candles you guys are looking at, it could just be a pullback, because remember we're on the 4-hour time frame. It could just be a pullback and then just continue going upwards. But if it doesn't do that, if it closes below this support zone right here, even though price is not below your 200 EMA, if you really know how to trade and you know what you're doing, you just get in the trade and set your stop loss, your TP right here and your stop loss right here. Now, But the normal way, the very, very good way to trade, to use this strategy, is to wait until price gets below the 200 EMA if you want to actually sell, and wait for the cross to happen, just like here, just like over here. Right here it was going upwards, and if it's coming down, make sure it crosses the 200 EMA coming down. Now that's how you use it for a buy. Now for a sell, is basically the same thing. It's basically the same thing. You make sure price is below the 200 EMA, and that the cross eventually happens. There you can see the cross as well. Now, if we take a look at the perfect time to get in, let's say you actually missed this right here. All you got to do is wait until price closes below this support zone right here that you guys are looking at right here. And once you see that happen, you just get in the trade. You get in the trade. So if you had got in the trade, let's say right here, if you had got in the trade right here, now where would your take profit be? Your take profit will be right here, because as we can see clearly, we have a support zone right here, and this would have been your TP1. This zone right here would have been your TP1. Now let's see how many pips that was actually using a strategy like this. I'm telling you guys, all you got to do is believe in yourself and try it out. So we'll be looking at 68 pips, almost 70 pips, just from here to here. Even if that's all you get, that's still very good. And once you get that, you just sit and wait and see what's going on in the market, or you look for another pair to trade. So guys, it's really that simple. I tried not to I tried to make sure this video wasn't too long. So guys, if you find value in this video, try it out. Make sure you guys give me a thumbs up, and also share this video, because as we all know, sharing is caring. And make sure you all subscribe to my channel as well, and turn that bell notification so you guys don't miss any of my future videos. So guys, thank you guys for watching, and I will see you guys at the top, because the bottom is way too crowded.